All right, yo, what's up for everyone? I have a pretty interesting video for you today because I specifically want to talk about the software names that are getting crushed right now. And I want to go over some of my favorite ones to potentially buy the dip on. And these right here, all the main software stocks that are being hit, like believe it or not, Microsoft's a huge software name. They're nearly at a 52-week low right now. So Microsoft's not doing too good. Salesforce, which owns Slack, is nearly at a 52-week low. Adobe, check out Adobe. I use their products nearly every day with Photoshop, After Effects, but their stock's at a 16 forward PE. All these software names. Look at GoDaddy. If anyone's heard of GoDaddy before, it's like a domain. There's been so much new competition in the domain name kind of sector right here. So GoDaddy's trading at a 17 forward PE. I mean, that's a massive, sharp little downtrend they've had specifically these past 2 weeks. I found that pretty interesting. ServiceNow also seeing that software decline at a new 52-week low right now. So I want to go over some of my favorite names, software names to buy the dip on. And the first one I want to go over is actually Fortinet right here. This is in the cybersecurity industry, and I love everything about this company. I love the industry that they're in, and I love their subscription business model. Now, they are a little bit expensive. Like, let me pull up the forward PE. So yeah, the forward PE is a 30, but I think it's justified, or the risk to reward to start maybe slowly dollar cost averaging into this one is starting to look very fair. So it's mainly a subscription name. So Securities subscription is 39% of all their revenue. Check out the annual trend here. This is what you want to see, and this is what you want to trust in a pure growth stock with no dividend or anything. Annual revenue, it's a new record, like quarter over or year over year, it's up 12%, after 20%, after 33, after 22. So incredible growth, and not just on the security, but their product revenue is also at a record, up 18% year over year, and their technical support is up 12% after 18. So all three businesses are actually growing very nicely. So let's pull up their bottom line because they're making a lot of top line revenue, but what about their net income? Well, this is where it gets really impressive. They're making already like 400 to 500 million of real after-tax net income this quarter. It says the net income fell 12% year over year. It didn't actually, because they had a one-time tax adjustment last year. They really had a record profitability Q3. It's never been more profitable before. So yeah, they really are making 400 to 500 million of after-tax net income a quarter, and they're doing a little bit of buybacks. Actually, let me pull. Oh, look at the free cash flow too. Hold up here. Another big important metric for a software name is their free cash flow. They're also printed over 500 million of free cash flow a quarter. So what's Fortinet doing with all this? Well, they are investing a little bit in the future. They're spending a couple $100 million on new assets or potentially buying a company, but I think they're doing a little bit of buybacks. Wow, look at that. They did $1.8 billion of buybacks just in the most recent quarter, and then 400 million the quarter before. And that's huge because normally they're diluting you by $20 million a quarter, which is really nothing. Dang, they did buybacks back here. So I like that they're up in the buybacks, and they could easily afford that too. 1.8 billion, they're making 500 mil of after tax net income a quarter and free cash flow. Hey, what up, y'all? Good to see ya. MC, Plasma, Looney. Hope y'all are having a great Sunday. Right now, we're specifically going to go over a few software names because at the beginning of the stream, we're really focusing how on all these software names are like in their own recession. Like it's so weird. Like Adobe, Salesforce, Duolingo. Like look at Duolingo stock. Duolingo stock is only worth $7 billion. But this is another one I actually like is I do like as a company because their financials are so good, but there is one thing really crushing their valuation right now, and that's this kind of AI replacement thesis where maybe in 10 years from now, you don't need to learn a new language because, your Meta AI Ray-Ban glasses will live translate whatever they're saying or something like that. AI will be so good where the live translation is actually perfect and you just don't need to learn a new language, something like that. And I still think this stock is pretty interesting to put on your watch list. They're at a 34 forward PE. We don't look at their current PE of a 19 because they did have a slight one-time adjustment. It says they made 300 million net income this quarter. They didn't actually. They only made 35 million, but this was a record profitability quarter. And they actually made another 10 million on top of this because of their net cash earns them like 10 mil of interest a quarter. But anywho, check this out. This is another subscription model company, and this whole AI thesis is hurting them, but it's not hurting their numbers yet. These numbers are are booming. The subscription revenue, like I can't believe this. Like I literally can't believe it, how impressive this is. Look at these year-over-year comps in the middle. It's always up 40 to 50%. Like subscription revenue's up 45 after 48, after 45, after 44, after like there's only green on these year-over-year comp numbers. And if you don't pay for their subscription, you see ads on their app. So their advertising revenue is also at a record of 46%. So everything here is headed in the right direction. The only thing is they might still be this is the crazy part, they might still be a slight bit expensive even at this 52-week low level, because the 34 forward PE isn't exactly a super cheap company, but a company that grows their subscription recurring revenue at this rate deserves a high multiple like that. We can see the expectations as well. Revenue is going to go to 300 mil. The EPS is going to go to $1. That's going to be a record. This kind of skews the chart a little bit, makes it look weird, but the EPS is going to go from 72 to 95, and they always beat slightly. We can just basically look, better metric would be the EBIT, basic earnings before interest taxes, is supposed to go to 40 mil. So for these reasons, the fundamental qualities here of the financials makes this one still attractive for my watch list. But you still got to keep in mind that AI thesis, but it's still not hurting their numbers yet. There is probably some new competition from other AI or like AI language learning apps. I don't know. So the next software name that's nearly at a 52-week low, I would really, out of all the software names, if I were to buy one right now, I'd pick Microsoft. I mean, and some of these other ones, but Microsoft is like the safest overall pick, where if you buy Microsoft now, you should literally get, not financial advice, but 8 to 10% of your money back every year for the rest of the time. They're that quality. You should get S&P 500 type returns, whatever the S&P 500 is really doing that year. So Microsoft's at a super fair valuation. They are cheap. They're way cheaper than Duolingo when in terms of paying for growth. The forward PE is a 28. That's very fair. And Microsoft really is a software name. They've converted the business from personal computing, this hardware business that's very low margin, lower revenue than it was in 2022. They're not focusing on their hardware, actual PC sales. They're focusing on their software business, which think Office 365, OneDrive, all those solutions right there. That software makes them literally, I kid you not, over 120 billion of annual revenue. It's incredible. And just this quarter, let me pull this up. Just this quarter was up 16%, after 12, after 53, like just continuing that growth is nuts. And that's just one part of their business. They also have this high margin cloud business, the Azure cloud. Check this out. It's at $30 billion just this quarter. And on annual revenue, it's another huge segment that does over 100 billion of annual revenue for them. It's nuts. And it's going to be even more, probably like 100, at this, that's 120 billion a year. So yeah, then we looked at their computer cloud, but Microsoft literally has a better credit rating than the U.S. government. So Microsoft is less likely to default on their debt than the U.S. government is. Isn't that crazy? If we go to their bottom line right here, this is nuts. This is real after-tax net income after they pay 7-8 bill of taxes a quarter. They are netting 25 to 28 billion of after-tax net income a quarter. They're investing a lot into the future right now. Buying 49% of like OpenAI, buying a bunch of NVIDIA chips, training LLMs, all that. So Microsoft, you can't bet against them. You can't outspend them. Number one software name. Google's kind of a software name, but that's Microsoft. They're just so quality. Let's see if there's any news around them right now, because normally there's a lot of news around Microsoft. Microsoft launches initiative to address data center impact on communities. Yeah, they don't want to have their data centers impact the local community and raise their electricity prices. Microsoft expands investments with 500 million annual commitment with Anthropic. That's actually really interesting. Microsoft highlights leadership in cloud and AI integration. Microsoft launches Claude for healthcare. Okay, anyway, that's Microsoft. I want to pull up another one right here. Then we'll look at some of y'all stocks. Don't worry. We'll be there very soon. What app am I using? Yeah, hey, this is a brokerage right here where you buy stocks on. If you want to get this app, it's in the link tree in my bio, very first link there. Broker called Moomoo. Yeah, it's actually an affiliate link too. So if you go and like deposit, we'll both get like a little free stock, but it's a free app. So let's pull up really quickly Netflix, and then I want to get to Salesforce and Adobe. These are other two good ones. And we got to look at GoDaddy too. I want to get to all these because they're all pretty cheap and they're interesting. So here's Netflix. This is another. So I love subscription model companies, and Netflix just hit a new 52-week low. Isn't that crazy? And the valuation's cheap as well. This is why I like them. A 28 forward PE. Now there is a little bit of noise right now kind of hurting their PE with this whole whole Warner Bros. Discovery acquisition. They're trying to buy them for like 89 billion, but Paramount Skydance is bidding 100 billion. So the more the bid goes up, it's even more decretive to their EPS. But check this out. This is crazy. Netflix has 300 million premium subscribers. And on average, they make $11.69 per month on average per paying membership, which is pretty nuts. And this is what you get with Netflix. A lot of people would cancel their Netflix subscription last out of all their subscriptions, and they're easily printing 2 to 3 billion of real after-tax net income a quarter. And same with free cash flow. Like, the fundamentals are here. They really do print net income, and they don't pay a dividend or really do any share buybacks. So that's how they're able to afford doing this huge Warner Bros. Discovery merger / acquisition. They're doing it with some shares and also just all cash, or partially cash. So Netflix, I actually really like the risk reward on this one. If I wanted this as 5% of my portfolio, I'd probably make it 1 or 2% at this current price. I wouldn't make it the full 5% because it could certainly go lower. You never know what's going to happen. But this is certainly one I put on the watch list because Netflix is quality and they're at a fair valuation of 28 PE. That's the same as Microsoft at their current price. So yeah. Next up, let's pull up GoDaddy because not many people really look at this one. Check out the huge, massive decline that this one has experienced. Another kind of software. It's like where you buy a domain name. Let's see, is there any kind of news? Nah, no news around them. But they're really cheap in terms of PE. Check that out. Current PE is an 18 and the forward PE is a 15. So they are already profitable. Check this out. Wow, I didn't know it was this good. They're easily making, 200 mil in net income a quarter. And that's actually great. If you look at the operating profit, that excludes these little one-time adjustments that they had back here for some reason. The core business is super at a new record. The profitability on this company, what are their margins actually? Gross margins are a 63, net margins a 16. So they do have a great little software name. Looks like they did kind of leverage up. The liabilities are like the same as the assets, but yeah, the free cash flow looks great as well. Oh my goodness. 400 mil of free cash flow, 200 mil of net income. So the debt's not too big of an issue if they're trading at 8 times, or it would take them 8 years to pay off all their debt. So let's see here. Their core business is up 8% year over year after 2.5. So it's kind of, the growth is actually growing. It's 8%. That's the highest on the screen in the middle. Looks like their core business or whatever is finally growing a little bit better. And applications and commerce grew 13% after 16, after 11. So that one's also growing kind of nicely. Yeah, the expectations, they expected 2.33, they did 2.26. They beat on revenue, they beat on EPS, and they beat on EBIT, yet the stock tanks because of the whole sentiment around all the software names. So this is another one potentially you could put on your watch list. It's like there probably is increased competition. I know there's like a .shop or like a Shopify is doing their own kind of domain name competitor to GoDaddy. But anyway, all right, last one here, or maybe we'll do Adobe too. I want to get to Salesforce again. Right now, really quickly, we're looking at all the software names because all these software names are here all at a 52-week low, pretty much. Trade Desk, like these software names have been getting crushed. Like a Trade Desk 52-week low, DocuSign at a multi-year low, ServiceNow 52-week low. So software is in like its own little recession, and we're looking at some certain names to buy the dip on. Then we'll get to y'all stocks. Don't worry, I definitely want to get to them. We only got like 2 more left to look at. Ooh, like what up, Clem? Good to see you. He says Rocket Lab. That one's like my favorite growth company, and I love Taiwan Semi too. What up, Jim and Rob and Faustin? Good to see everyone. Okay, here's Salesforce right here. Another one of the well, let me say that. All right, so here's all right. Yeah, dang. All right, so here's Salesforce right here. They're the same prices they were back in 2020. So the stock is not done too well. And what's the forward PE on Salesforce? Okay, a 29 forward PE, Are they beating on expectations normally? So they might even be trading at like a 26 forward PE if they constantly beat on EPS like they have been doing. Check this out. Analysts expected $1.62, but they did $2.19. This is the thing. The software names are performing as expected. They're beating expectations, usually all these, but the stocks are still getting crushed anyway. Like this really was a great net income quarter. They made $2.09 billion net income, up 36% after 25% growth. Yeah, they really did net $2.09 billion. The revenue revenue is kind of high single digit growth, like 8.6 after 8.3. So kind of high single digit growth there. And they have so many different businesses, like they're in services, sales. Oh, this is their Slack platform. Probably their best acquisition they've ever done was Slack. I love this software name specifically. So that's doing great. Let's just see how this is doing. So Agent Force, or they renamed it to Agent Force Software or Service, but we can just call it their service revenue. Yeah, that's up 9. Let's put up on an annual basis. So their service revenues at a record. Agent Force sales, or they shouldn't call it Agent Force but the sales are at a record. Slack's at a record. Integrations at a record. So everything there's growing, which is very nice. See, I really do like Salesforce. They do make 1.5 to 2 billion net income a quarter. Same with free cash flow. Their Q1 or their fiscal Q1 is their best quarter every year. They make it went from 6 billion to 6.3 billion. They print free cash flow that quarter, and they can do like a bunch of buybacks. And they always buy a bunch of companies. Like they just bought, it's probably delisted now, so I can't find it. But yeah, dang. Let me see if I can find it on Webull. They just bought this company, INFA. Informatica, yeah, so check this out. If the stock ever has like this flat look on it, that means they just got acquired. And basically all this revenue now, if we go to this company's revenue right here, this 400 mil of revenue now all goes to Salesforce. So Salesforce the rest of the time will just have an extra 400 mil of revenue a quarter. Looks like they're not too profitable yet, but they're not losing any money. Maybe it'll be accretive to EPS for Salesforce, who knows? All right, let's look at some of y'all's stocks now. Microsoft is close to me to being a big buy. I agree. Microsoft is phenomenal. Let me pull up Taiwan Semi right here. This is a fab name. You know, NVIDIA just designs the chips when Taiwan Semiconductor actually produces them in Taiwan. And they're expanding to more U.S. Yeah, check this out. Taiwan Semi builds 5 new U.S. semiconductor facilities under trade agreement. Pretty cool. Taiwan Semi confers max production of 2 nanometer chip technology. So, yeah, let's go. That's going to contribute 20% of their total revenue for 2026. Let's go check out their earnings hub overview real quick, just to get a quick AI analysis of what they reported. So, advanced technologies and 7 nanometer and below accounted for 77% of wafer revenue. High performance computing represented 55% of total revenue. Okay, that didn't give me too much help. Anyway, yeah, check this out. They have an incredible market share, 71% market share, up from 62% market share. Incredible. Yeah, they sell a bunch of wafer chips, basically NVIDIA, manufacturing NVIDIA chips. But check this out. Their revenue grew 26%. And that revenue was 33 billion. But it grew 26%, and the net income grew by 72. And the net income was 19 billion, and that was real. Actually, they had a slight adjustment. They made really around 17 billion, but doesn't matter. Their margin expansion is crazy. They really have like a 50% net margin this quarter. That's a record. It was a record quarter, even when you exclude the slight adjustment, but record Q4 quarter, incredible. Out of this 33 bill, they netted 18 billion, or really 17 million. So a 55% net margin, fortress balance sheet. They deleveraged it, and you get a dividend of 0.9% dividend. So it's like exposure to NVIDIA with a higher dividend yield. And they're not some expensive company. They literally trade at a forward PE of a 24. That's cheaper than like so many great. That's cheaper than like all the Mag 7 except for Meta. So yeah, Taiwan Semi is a great one. And I expect, at this cheap valuation, it's probably just going to continue to climb up. Like if I was a shareholder of this one, I wouldn't trim, or I really wouldn't sell, because I see this one continue to climb probably another 20-30%. Not financial advice there when they're that cheap. What app is this? Yeah, hey, Will. Actually, this is not Webull. I think she's saying, can we look at Webull stock? There's actually a brokerage called Moomoo. If you wanted to get this app I'm on right here, where you buy and analyze stocks on, it's free. It's in the link tree in my bio, the very first link there if you want to get this brokerage. So let's see here. BKSY. I think this is Black Sky. This one you got to be real careful with. I see this one more of like a swing trade and a momentum trade. Like all the space stocks are booming right now, Rocket Lab. But yeah, they do like satellite imaging, but they're just not profitable yet. They're losing a bit of money. And so this is just not what you want to see. The sales are down 13%. So the revenue's down 13. Last quarter was down 11. And the profits are super negative, and the losses worsened year over year. So they're losing like 20, sometimes from more net income a quarter. So when the whole company's worth 900 million, and the company's worth 990 million, when you lose, 100 million of net income for the year. That's 10% of the entire market cap. Plus the sales are in a decline. That's just not what you want to see. So the fundamentals don't align with the momentum, and it's not going to, in my opinion, it's not going to sustain this momentum. And I don't really see this one as too great of a buy right now, just because the fundamentals don't look too great. But I think they're just doing well because all the space stocks are doing well. If I had to pick a space stock, and I would not buy this one at their current price, but I can totally see why they're doing so good. It would be Rocket Lab. And the fundamentals explain why this one's at all time highs, in my opinion. They have their space systems revenue. This is the kind of growth that you trust. It's up 36% year over year to 100 million. It's never been over 100 million of revenue before. So this was a record quarter, up 36% after 81% growth. I mean, incredible. And that's just their space business. They also have their launch services, which was up 95% year over year. So both businesses are booming. Revenue is supposed to go from 122 to 180 million year over year. So there's still going to be incredible growth for the next couple quarters and years, fortifying their balance sheet because they did this acquisition of Geost for like $200 million. So yeah, that's the thing with Rocket Lab, but it's like super like dang, they're worth 51 billion. Yeah, that's an insane valuation. That's like a Palantir type valuation. That's really expensive. But hey, what up, Jam Jam? I'm so behind here. I do apologize. Near term hardware profits being favored versus long term software return. Yeah, like a Micron right now. This is one that's really benefiting. This is really benefiting from the memory shortage, pure memory shortage play. They're up literally at a new all time high, up 8%. I've been saying for the longest time this is just going to continue to climb higher. So let's see, Micron to acquire PMSC site for 1.8 billion, strengthening their DRAM production. That's really cool. I want to see their like backlog. There was a thing I saw earlier. Yeah, Micron projects memory supply shortages until 2028 amid AI demand. I mean, I think they're like fully booked out for 2026. All the orders are. Like they have a huge backlog. And here's why Micron, this is crazy. Like if you look at their stock price, they're at a crazy new all-time high right now. And you must be thinking the stock must trade at a really high, valuation, a high PE after all this growth. But this is the crazy part. The forward PE is at 9.4. That's insane. 9.4 forward PE. And we can just see that by the EPS projections. Like this quarter was a record, $4.60. It's supposed to be $8 next quarter, and then $9. So look at these year-over-year comps. It's going to go from $1.60 to $9.50. It's going to be nearly 1,000% EPS growth, and that's literally going to be over like 10 billion of net income a quarter from now on Micron. That's why Micron isn't crazy overvalued yet. And I could see them stretching up. Like this forward PE could go from a 9 to like a 12 easily. And send this up another 20-30%. But that being said, would I buy it right now? It's tough to do it, but I maybe with the smallest amount, but it'd be so hard buying it. But I wouldn't sell it. If I was a shareholder, I would not be selling or trimming. They are really quality. So let's pull up IREN right here. Yeah, I'm seeing some people say Iris Energy. So this company has converted from a Bitcoin mining company to a cloud company. So basically, I don't love this one because at the end of the day, this company literally just owns a bunch of NVIDIA chips in a data center. Nothing too proprietary there, just a bunch of GPUs. But that right now, I think still right now, like 80% of the revenue is still Bitcoin mining revenue, but they're converting their business because they just got massive orders from like Microsoft. They're converting their GPUs basically from mining Bitcoin with their GPUs to renting out the capacity of the GPUs to these cloud service providers like the Microsoft Azure Cloud. I believe they got a big deal with Microsoft Azure Cloud, but check out these year over year growth to the revenue. Like this is another thing that makes this stock incredible. The revenue's up triple digits for the last 4 quarters in a row. 355% growth, 229, 166, 170, incredible revenue growth. They're still and they're not losing that much money. Like on average, they're kind of making money. They're still not like making any real money yet, but like they're definitely headed in the right direction with their profitability. So yeah, this is one of the data center stocks, and I think these are going to do well for the next few years, but I wouldn't hold these for the long run. I wouldn't feel too comfortable doing that. Maybe I think they'll do great probably through 2028, 2030 maybe, but I wouldn't they're kind of the bag holders in the long run. Okay. Um, oh, I'm so behind here. I'm so sorry. DGXX. What is this one? DigiPower PUBM. So I don't really love to cover these. If you look in the top right, they're only worth 200 million and they've done terrible. So but let's go judge them real quickly. So co-location services, sales of energy and electricity. So the whole company's worth 200 million. And yeah, this year they've lost, 10, when you lose $10 million, that's 5% of the entire company you've lost. So they lost 10 mil. On average, they're losing like a couple mil of net income a quarter. But good news, they do have a good balance sheet. But I wonder how'd they do that? Did they dilute you? So, they're they're not diluting you by issuing debt. They're diluting you by issuing shares every quarter. So that's not great. But it does fortify their balance sheet, gives them a lot of cash, and that cash is actually earned an interest, and it's actually helping out their operating profit because this is before interest. The after interest is this said they made 300K. But what's the revenue? What was the revenue growth? So yeah, dang, look at this. So the revenue's down 11% year over year, down 12%, down 28, down 47. So the revenue is not as good as what it used to be. I just be real careful with this one, small market cap. I just keep the size on that one very, very small. All right, what's this one? Pubmatic. Another small one. They're worth $350 million. Yeah, I want to do ServiceNow stock as well. Any low cost shares? Well, hey, you can buy fractional shares. So the price of the shares never matters. But Microsoft's a great stock, I think, to buy right now. All right. Let's see right here. Apple's a big hardware name selling iPhones, but then they have the services revenue on top of that makes Apple so great. Actually, I kind of want to cover Apple. If anyone wants me to look at Apple, I want to look at Novo Nordisk too. Okay, this is a $350 million company. They're kind of at an all-time low right now. Let's see if the fundamentals explain it. So yeah, the revenue's down 5% year over year. So they've lost their growth and they're losing money every quarter. Like, look at these year over year declines. Like, for the past 4 quarters, like these year over year declines have been crazy. So they're losing way more money. Like, is there even analysts covering this one? There is, but look at the revenue. It's supposed to go from 63 mil to 58. So there's going to be even more negative kind of top line revenue. EBIT's supposed to go from negative 11 million to a negative 20 mil. So I'd be careful with this one because the sentiment is not in their favor. And neither are the forecasts. The forecasts aren't too good on this one. And that kind of explains probably why it's not done too well. All right, let's pull up. Let me do Novo Nordisk, and then we'll get to ServiceNow. I'm always so behind in the chat, and I apologize. I want to always try and get to all them. I only spend like 1-2 minutes on each one, so I can get to everyone's talk. Hey, what up, Carlos? Yeah, Micron and SanDisk are two big, basically memory shortage pure plays. So here's Novo Nordisk right here. They're up 9%, and this is for 2 reasons. So their biggest competitor, Eli Lilly, was about to release a pill version of their Zepbound, basically a pill version of their own weight loss prescription, their biggest competitor. But the US government said, we're actually going to give a huge delay on when we're going to allow this to be FDA approved. And Novo Nordisk is FDA approved. So basically they're like the only treatment right now. I actually want to see if I can find that Eli Lilly news. It made Eli Lilly fall a bunch. Let's see this right here. FDA delays decision on Eli Lilly's weight loss prescription to April 10th. It got super delayed, so they're not going to get FDA approval for it. So let's go back to Novo Nordisk right here. They also had a huge Amazon partnership where they got like 6,000 new subscribers buying their oral Wegovy pill on Amazon, which is pretty cool. Let's see. Novo Nordisk CEO outlined strategic focus on diabetes and obesity with acquisition capacity up to $40 billion. Yeah, they've been trying to buy companies like Metsera. So yeah, this is a pure weight loss play. Novo Nordisk owns Ozempic and Wegovy. So 93% of their total revenue is basically their weight loss product. So it's a pure weight loss play. Now, one of the reasons they, gapped down so hard, they went from $70 all the way down to $40, was their bad earnings report because they agreed to massively cut prices for Ozempic. Because actually, Ozempic got improved in Medicare, Medicaid, but they agreed to lower their prices and basically lower their margins dramatically on them. So look at this. This quarter, analysts expected 12.1 revenue. They only did 11.7 bill of revenue. So they massively missed on revenue. So check this out. Even with that miss, the revenue grew 10%. So the revenue grew 10%, but the net income fell by 22. And that's real. Like the real net income, the operating profits fell by 26. So what does that mean? That means margins are collapsing. Net margin went from 38 to 26. So that's a real big not good. The net margin to fall 10% year over year. So, but the future sentiment is not really good for them, with the new Amazon thing. I'd just be careful with this one. There is a lot of competition, a 17 forward PE. They've made some great progress. Yeah, 60% of the revenue comes from the US. I think they're headquartered in the Netherlands or no, Denmark. So they're headquartered in Denmark. Pretty interesting there. So yeah, there you go. That's your weight loss play. I probably wouldn't buy it today, meaningfully today, but maybe put on the watch list. Eli Lilly's another one you could put on your watch list if you like weight loss stocks. So yeah. All right. What was this one? Take Two, GTA 6. What is PPL? Let me pull up PPL Corp real quick. And then definitely want to get to Take Two Interactive. I bought SanDisk a couple weeks ago. Hey, Luna, you must be doing great. So, Lilly did drop when TSL while my other healthcare stocks flew. Oh, hey, what's up, Brian? Nice. So here's PPL Corp. So this one has not done too well, or it's the same price that it was in 2014. So it's the exact same stock price that it was in 2014, but I think it's a dividend payer. Okay, so yeah, look at that. You get a 3% dividend every year. So, Kentucky regulated, Oh, is this a utility? Rhode Island regulated. Let me see here. Yeah, this is a regulated utility. Okay. Pretty interesting. I don't know if these are like high growth states like Kentucky and Rhode Island, but maybe that's why the stock's not doing good, but they're making great net income. Check this out. They're usually making 2 to 400 million of after-tax net income a quarter, and they pay a 3% dividend yield. These regulated utilities, if they don't get a certain amount of return, the government gives them that money. They guarantee them like a 3% return if they don't get that. But yeah, it's an interesting one. They've kind of been one of the worser performing utilities. And check this out. So you get a 2.9% dividend with PPL. This is a utility, a regulated utility that I just bought. This one, is well above where it was in 2014. And and check this out, even if you buy it right now, you get actually higher yield and lower payout ratio. You get a 3.3% dividend yield with this one, 19 forward PE. So let me actually show you my position in them just for transparency. Yeah, is this a recording? This is not a recording, but I can see why you're saying that because I miss it. I'm so sorry if I'm missing your chats here. Like I really try to get to all of these. But yeah, I'm reading YouTube and TikTok stream. But yeah, Southern Company, I do have 11 shares of them. They have a nice 3.5% or 3.3% yield. I got 11 shares of them. Nice little utility play. Okay, that was the utility play. Yeah, I wanted to get to TTWO because this is a niche stock right here. Cool story around this one. This is the company that owns Rockstar Games. So, GTA 5, Red Dead Redemption. I think they own The Sims and some other games. But the main catalyst here, why the stock has appreciated so much despite not great financials going up, is pricing in the growth of GTA 6. As we know, GTA 6 keeps getting delayed. It's anticipated to be one of the biggest games of all time. And they basically have this asset they're about to release that as soon as they release it, it's literally going to bring them in billions of revenue instantly and so much recurring revenue kind of for the rest of the time in these next couple years mainly. So they're basically pricing in that future growth. I think the sad part is probably everyone knows about it. I think it's really priced in. It's really just will GTA 5 do better than expected or who knows? So the risk reward buying it today doesn't look too great. I'd probably wait for them to fall a little more because the forward PE is still a loss. They do lose a bit of money. Check this out. Spending on game development. Like they haven't made any net income. Dang, they haven't made a single dollar of net income any quarter since 2023. Every quarter since then, they've just lost hundreds of millions a quarter. So GTA 6 will be a huge catalyst for them. I'd wait for them to fall a little more though if I really wanted to buy into them. All right, so how do you feel about Meta? Oh, and I wanted to get to service now too. You know what? Let me do Meta real quick because this is a steal of a deal. This is the probably cheapest stock we've looked at all stream in terms of paying for growth. If you look at it kind of on the right there, the forward PE on Meta is a 21. and the current PE is a 27. You don't look at the current PE because it's artificially high. Because if you go to their EPS this quarter, it says they only did $1 of EPS. Well, this was a total one-time adjustment. Again, EPS is just net income per share. So they'd always look the same. The net income was only $2 billion this quarter. Total one-time tax adjustment. Again, the operating profit doesn't include taxes. So in that, they had a $16 billion one-time tax charge. So this was a record Q3 in terms of profits when you exclude the tax. I mean, it was an incredible Q3 quarter, record profitability, record sales, over $50 billion in revenue for the first time ever this quarter. But one thing being questioned on Meta is how much they're spending on AI right now, and AI chips and these different startups like Scale AI and Manus. They're spending 20 to 25 billion of net income a quarter, and they don't make that right now. They make around 16 to 18 billion net income. So for the first time ever with their Promethean bond issuance, Meta actually has a net debt position for the first time in history, their entire history, which is crazy. But I love that Meta is they're actually cutting jobs in their metaverse. The metaverse business. They're cutting jobs. And they're focusing right here. They're doubling Ray-Ban glasses production. I love the Meta Ray-Bans right here. I think everyone's going to get into the kind of smart glasses industry. So they're doubling their capacity to 30 million units. That's crazy. So that they've seen big success on that. So yeah, you can get Meta at a 21 forward PE. I'd buy it right now at the current prices. And I just did buy a little bit more Meta. Oops. Come on now. I did just buy a little bit more of Meta too. I'm never opposed to buying fractional shares, and I bought 5.1 shares of Meta. I'm never opposed to buying fractional shares. I didn't mind, so I had $60 of cash. I'm like, hey, that'll perfectly buy me 60 or 1.1 share of Meta. So I just buy a share of Meta. Yeah, great valuation on them. Yeah, here's my. I haven't even done a portfolio update, and this is my dividend only portfolio. Every stock in here kind of pays a dividend, but yeah, Meta's a great company at a great price, really. Okay, let's do service now. J&J did well. Yeah, Johnson & Johnson with their oncology business is booming. Hey, yo, Josh and Puck. Dude, no way. Thanks for those roses. I can't believe that. I really appreciate all those gifts there. And Faye Marie, no way. Y'all just gifted so many roses. I really appreciate that. If you got a stock you want me to look at, let me know. We'll check them out. So here's ServiceNow. This is a software name kind of at a new, literally 52-week low, multi-year low right now. They're not crazy cheap yet, even on the dip, unfortunately. But this is one of the most quality software names out there. The current PE is a 76. And the forward PE is a 59, so they're still expected to grow their, EPS by 20% plus. Let's actually see that. Yeah, the EPS is going to go from 38 to 51. And notice they always beat on their EPS expectations every quarter by a good chunk. So they're beating on revenue, beating on EPS, beating on EBIT as well. They're triple beating every quarter, but it's just the sentiment around software names that's hurting this stock right now. Like if you look at Adobe, you look at Salesforce, or even Microsoft, all the software names are getting hurt. And if we go to their bottom line, ServiceNow prints money. I almost like them a little bit more than Salesforce. They're easily making $400 to $500 million of after-tax net income a quarter, and net income is just EPS. It was 48 cents of EPS this quarter, record net income, record EPS, and the EPS is expected again to just keep on climbing higher to 52 cents. And they always beat. So I nibble on this one, at a 59 forward PE. It is a little expensive even after the dip, but they deserve that. They certainly deserve that high PE ratio. It's because they're not missing on expectations. They are, analysts know they're expensive and they should trade this expensive. So what's their free cash flow? Yeah, the free cash flow is ridiculous. Oh man, I think they're buying a company as well. Treasury Department reduces ServiceNow contract by $15 million. Well, hey, that could be some bad news. ServiceNow faces price target reduction amid M&A and valuation concerns. What are they trying to acquire? I actually like that they're trying to acquire something. Anyway, ServiceNow is a nice software name, but they're also being hurt, like all the software names are. Okay. Nicola said, I follow both on YouTube and TikTok. Hey, thank you so much. If you want to hit the follow button, we stream every day. I sell nothing. I literally have no course, book, what's up. I don't coach, really sell nothing. I'm just on here giving my opinion. Nothing in this is financial advice. I'm not an expert. So Faye, thanks again for the crazy amount of roses, and Puck as well. And Josh, I can't believe it, for the 19 roses and chili peppers. So Faye said, can we look at SoFi? Absolutely. This is one I do own, and it's one of the stocks I regret selling the most. I'm up crazy on SoFi, but I'd be up a lot more if I didn't trim this one in the past. We bought this one years ago. I think it was during this dip right here. Was it even before this? Yeah, dang, it was way back here is when we bought our first SoFi shares. We kind of haven't been able to buy more ever since. So SoFi, they deserve all the hype around them. Like their great fundamentals justifies their stock price appreciation. Check this out right here. Head to SoFi. This is what's crazy and why I love SoFi and I kind of want to buy more of them. If we go to their financial services business, this is 44% of their entire revenue. It has been growing like crazy. It's up 76% year over year after 101% growth, after 141% growth. Like this just hits a new record every year, every quarter. It's unbelievable. No analysts were expecting that sort of growth. And we can actually see the analyst expectations down here. It's the orange line. They always beat on revenue, beat on EPS, beat on EBIT every quarter, and the expectations are just up and to the right. Like they're just supposed to hit a new record net income every quarter for the next couple quarters, which is just crazy. Like all their businesses are booming. Their lending revenues also at a record that's up 25% year over year to 490 mil. It's never even been close to that before. So SoFi's a behemoth, and that's why I think really people are taking SoFi serious. They're making over 100 mil in net income a quarter. They're beating on every expectation every quarter and growing their top line. So nice. Great. I bought a couple of shares of Salesforce Friday. Hey, Rock, I actually really like Salesforce. I do like Salesforce. Okay. What up, Craig? Clayton said VST Vistra. Yeah, this is like your energy infrastructure play right here. I think they do like cooling, water cooling. Let's see. Oh no, this is no. I'm thinking of Vertiv. Yeah, I always get those messed up. Vertiv and Vistra. Yeah, Vistra Energy. This is my second favorite nuclear name. If I had my number one nuclear name, that's like beats Vistra Energy by far. CEG, they own 33% of all the US's nuclear reactors. They own about 35 reactors. Vistra Energy owns about 5 nuclear reactors. They're in second place. It's not really a close second, but they're still in second place. And Meta just signed a 20-year nuclear agreement with Vistra for AI data centers. So that's great news. And let's see what that says. We'll generate 400 million in EBITDA growth through premium price contracts for Vistra Energy. Pretty cool right here. But another thing, administration proposes electricity price caps on PJM grid, raising concerns for Vistra. So anyway, if we go to Vistra right here, it's kind of the future sentiment that's really in their favor right now. But yeah, they're a utility. Look at the forward PE, actually. Let me pull up the forward PE because they've had a lot of one-time adjustments to their current EPS. So the current PE looks expensive at a 59. But when you look at the forward PE, it's a 16.8. That's where it's like, hey, that's not that expensive. We can kind of see, yeah, so they had this one-time adjustment 2 quarters ago. They lost 93 cents. They were supposed to make 67 cents. But next quarter, EPS is going to go to 2.40 and $1.20. So on average, they're making like $1.40, 50 every quarter always. So yeah, that's pretty cool. And I like that Meta nuclear deal. So yeah, there's your Vistra Energy. It's like a unregulated utility play. Okay, Paul says waste management. Yo, this is a phenomenal, safe, never sell stock. It's kind of AI proof. AI can't replace, uh, getting your trash picked up every week. So let's pull this up right here. Waste management, they're not even expensive. Look at this. It's always the boring names that do good. So like waste management's at a 27 forward PE. I think that's very fair for waste management. If I had to trust a company for the next 50 years, like waste management is one of the companies I trust. Like on a 50-year time horizon, this is one that just seems really safe. They have actually a massive amount of land value with their landfills. Their real estate portfolio is huge as well. Yeah, let's pull up their bottom line. They easily make 100 million of net income every single quarter. And it just got artificially hit because they had like these one-time adjustments because they just bought this medical disposal business. I love this actually. They spent $8 billion buying this medical disposal business. And I like that I like that they're doing M&A right now. So yeah, you can pick up waste management, 28 forward PE. And if you buy the stock right now, you get 1.5% of your money back every year, no matter what, just in a qualified dividend. And they raise their dividend every year, not even including the stock price appreciation. Like you should get 1.5% in dividends and probably 6 to 7% in, stock price appreciation every year for an 8-9% total return. So I do like them. Okay, let's see here. Flosito said AVGO. Let me pull up Broadcom. Yeah, this is kind of a popular one. With their VMware business has been booming. Let's see if there's any weekly news around this company. Broadcom increases CWS supply by 30% for 2026 amid surging demand. What is that right there? Could add 8 to 10 billion in Broadcom's AI backlog. Interesting there. Arc. Oh no, Arc Invest acquires 50 million in Broadcom shares. So yeah, Broadcom, they're like Nvidia with the higher yield. They make TPUs, these custom chips instead of GPUs, but they have a point. This number can't hide from us. They have a 0.67% dividend yield, okay? And the payout ratio is actually way lower. But if we look at this is the thing why they're expensive, but not crazy expensive, because the current PE is a 73, but the forward PE is a 43. So they're supposed to literally grow their EPS by 30-40% next year, which is crazy. Let's go look at that. Yeah, EPS is going to go from $1 to $1.52. It looks more cleaner on the EBIT. They had a massive beat this quarter as well. It was great. So one thing I really like about Broadcom is how profitable they are. Actually, let me pull up the business breakdown, because a lot of people know them for their semiconductor solutions, which has been booming, and it's been growing very nicely, up 35% year over year. That's the highest growth on the whole screen. It's in terms of year over year. I've never seen 35% growth. So they just like great quarter here on the semiconductor solutions. Another huge business for them is their infrastructure software, their VMware business, which has been booming since 2023. You know, it was kind of flat for a couple years at, $7 billion revenue. Now it's $27 billion, $7 billion just this quarter, up 20% after 195% growth. Like, it's holding on to that growth. That's the crazy part about Broadcom. So that's why they deserve this, 43 PE. You really want to do like a 2 or 3 year out forward PE on this company because of the growth that's expected. Like the revenue, like it's sitting over 15 to 20 bill, and with their margins, with their 40 to 50% net margins, that's incredible. And they print free cash flow went from 5.5 to 7.5. It's just incredible. So yeah, Broadcom I do like. Nice little small dividend there too. No way. Hey, shout out to Craig on the YouTube stream with the $1.99 super chat. Yo, dude, Craig, I really appreciate that. He says DBX stock. Yeah, Craig, if you got another stock you may look at, let me know there. I really appreciate that. Hope y'all are all having a great Sunday. Stream every Sunday this exact same time if you want to hit the follow button. I sell nothing. So here's Dropbox stock. Can you do Robinhood? I'm thinking of buying shares. Yeah, we'll do Robinhood stock. What Up World says Archer Aviation. Seems to be same story. Cash Now, medical service, cash later. Yeah. Okay. So here's Dropbox. I feel like I've heard of them before. It looks like they IPO'd in 2018, and they've been flat ever since their IPO. So this stock has been flat for a while. Let's see if we can figure out what happened here. I know a lot of the software names are being hurt. Well, they had a massive beat on revenue this quarter. They expected 623. They did 634. They're always beating on revenue by a good chunk. They beat on EPS every quarter and on EBIT. So they're massively beating on expectations every quarter. So they're profitable. They are making 100 to 150 million of, real after-tax net income a quarter. So they're making 140 mil a quarter. They do have a bit of debt though. That is a leverage balance sheet. Check that out. Like a lot more liabilities than assets, and the leverage has leveraged up higher. And I don't know why. So yeah, that's definitely not good. But what's the PE on this guy? Like the forward PE is a 14. So they're trading at 14 times net income. Half the revenue comes from the US. I think they're kind of just being out innovated, or, just Dropbox right here. It's like, I don't remember it exactly, but you like drop a file into there and then someone else can download the file. That's probably such a bad way to explain it. I don't know. Maybe it's some full solution software name, but I think it's kind of a commodity now. I don't know. I wish I could give you better thoughts on Dropbox right here. I do apologize. I like the fact that they're making a lot of net income every quarter, but I don't like that leverage, like a DocuSign makes the same kind of net income every quarter, but has no debt at all. So yeah. Long-term debt. Yeah. So I don't know. It's an interesting one. They're cheap, but I can understand why they're cheap. So I don't know. I maybe keep it as like a small, maybe really small size position. Josh says IRWD real quick. Hey, thanks again for those gifts there, Josh. So Ironwood Pharmaceutical. So it's a small one. They're only worth $730 million. So that's a very small market cap, 730 million. But I remember we were looking at this one. I actually put this one on my watch list. So out of all the companies that are worth $700 million, this is one I think is really interesting because this quarter specifically was a blowout. They expected 75 million of revenue and they did 122 million. And on this 100, like this was a crazy beat. And on this 122 mil of revenue, they actually made net income. They really made, after paying 25 mil of taxes, they netted 40 mil in net income. So it's now a company that used to be like a really choppy, losing a lot of money business to nowadays it might just consistently make good amount of net income. Potentially, think about this, it's already, if you remove these quarters, they could be making 80 million of net income a year. And 80 million of net income a year is over 10% of the market cap. So you could be paying this company at like a dog cheap forward valuation. But it's such a risky one. Like you really like they have a lot of debt, but 600 twice. I mean, they could pay off that 660 million of debt with not too hard. But there's still a lot of concerns. Like, yeah, the revenue growth has kind of been choppy. So I keep this one also as a super, super small position. But I like that they're on that beating on expectations like crazy and are making that some good net income. Okay. Oh yeah, I wanted to get to. Can you do Robinhood stock? Yeah. So I do own Robinhood. It's another one of the stocks I regret every share I've ever sold of them. Some of my biggest regrets in the market are selling out of great companies. Like, check this out. I only have 5 shares of Robinhood left. I used to have 50 more, but I sold those 50 shares at $36 a share. And Robinhood today is $108 a share. So that's one of my biggest regrets selling Robinhood. But Robinhood certainly deserves all the hype around them. They used to follow whatever Bitcoin does, but ever since they added in this prediction market stuff, they've decoupled from Bitcoin and have outperformed them. So, here's a cool metric. We get their net cumulative funded accounts. They have 26.8 million. This is the real number you want to look at, the net cumulative funded accounts, 26.8 million. When the same time last year, it was 24.3. So that's a good 6% growth. But check this out. This is what makes Robinhood incredible. They did 1.27 billion of revenue, and on this 1.27 billion of revenue, they netted in real after-tax net income after they paid 80 mil of taxes, 556 million. So that means Robinhood has a freaking 44% net margin. The picks and shovels plays I think are going to be the best. Robinhood, Futu, which is Moomoo, Webull stock. I own all these. I literally own a lot of the fintechs. I see them as like the picks and shovels play of like the stock market. It's like whenever you go buy crypto or do a prediction market contract or buy a stock, they keep a little fee. And it's all high margin for them, really high margin. So that's why I own Futu, SoFi, Robinhood, and Webull stock, and Dave, and a lot of these picks and shovels type plays because they really do print incredible net income at incredible margins. So I'm a huge fan of Robinhood stock, but they are expensive. 42 forward PE. It's tough to pay a 42 forward PE. So I would, if I wanted Robinhood as 5% of my portfolio, I would not make it 5% of my portfolio today, even though they're kind of off all-time highs. Went from 150 to 108, so I'd still wait a little longer. But it does look like a good spot to maybe nibble. It's on a nice technical kind of higher lows. In a 3 in a row. So I don't know. Yeah, Robinhood's great. CEG dip. Yeah, CEG. This was the main faller whenever the administration announces they want to put a price cap on so administration proposes PJM emergency power auction plan with price caps. So these unregulated utilities like CEG maybe won't have the same kind of premium pricing power that they've always had, which is a weird catalyst, but they just acquired Calpine, and that's what I love. So that's why the revenue is going to go from 6 billion to 10 billion in 2 quarters with this Calpine merger. But I am going to buy the dip on CEG as soon as, especially if they fall more next week. The forward PE is a 27. This is your number one nuclear play. They own 33% of all the U.S.'s nuclear reactors. They have these fully amortized, fully paid off nuclear assets that just print them free money every quarter. Because when you build a nuclear reactor, the first 10 years, you're still underwater, literally for the first 10 years. But after that, it has tremendous amounts of profit. So anyway, CEG is my favorite. I think it's going to be the growthiest utility, the safest utility stock. And I'm totally biased because I own them, but I own them for a reason. I have 15 shares. It's basically the only utility stock I own besides SO stock, but that one's regulated. All right. Let's see here. Beatish says Sekey. Hope I can find this one for you. It's kind of a weird ticker. We found it. I actually haven't heard of this one. Oh, Anfer, I want to look at Arista Networks. Yeah, remind me to get to A&ET. I got to get to that one. Arista Networks. Is Google overvalued at this moment? Not crazy overvalued. That's actually a good topic I kind of want to cover here. Remind me to get to Google. So here's a Japanese company. So they're an ADR. This stock is the same price that it was in 2015, unfortunately. So same price that it was like 10 years ago. We'll convert the currency from Japanese yen to US dollars just to get a better idea here. So printing solutions business, is that like a commodity? So yeah, look at this. If you look at their annual revenue for their printing solutions, it's lower than it was in 2020. And it kind of just stays flat for all of time. So that's flat. Visual communications business, that's also like lower than it was in 2020. So that explains probably why the stock has been flat for a decade, because they're not growing revenue and they're not growing profits. Well, I like that they're net income positive every quarter. So this company still makes around like 100 million of yeah, probably close to like 90 million of after tax net income a quarter. There is no forward PE. I guess no analysts cover this one, but they're at a 13 PE. I can see why they're at a 13 PE. I'd just be careful with this one. What's the dividend? You get a 4% dividend though, but yeah, I don't know if this will total return maybe outperform, like the tech heavy S&P 500. I just don't like how the revenue was like really flat for a long time. Let me pull up Arista Networks real quick. And hey, shout out to member Jeff Mack. Good to see you. Um, Thoughts on XRP? Hey, real quick about crypto. I wish I could give you real thoughts on crypto. We don't really cover crypto on the stream because there's nothing to really analyze here. There's no catalyst. Like this is kind of a cool thing about crypto. They can't report every quarter. They don't report earnings, so they can't miss on their net income or net margins. So it's kind of like a catalyst-free kind of asset, which is interesting. So yeah. I don't know much about XRP, but I heard it has some actual utilitarian value, like purpose to it. I don't really know, so I won't comment on it. But I don't own it. By the way, I don't own any crypto at all. Not that I'm bearish on it. I just like stocks the most. So here's Arista Networks. This is a phenomenal growth stock that just blows really impresses me every time I look at them. So if we look at their revenue right here, it's just up and to the right. They always beat slightly on revenues. They beat on revenue. They beat on EPS, and they beat on EBIT every quarter. And look at this bottom line. This company makes always, and it grows every single year, every quarter, 800 plus million of real after tax. This was the before tax number, 780. The after tax was 850. So they really do net 800 plus million net income a quarter. We can kind of see the annual trend here. That's what you want to see. This net income growth, this EPS growth, is exactly why this stock has also seen massive amounts of growth, because they're beating on expectations every quarter. It's insane. This balance sheet, the assets grow every quarter, liabilities stay the same. Are they like buying? Yeah, they're spending like 800 million to $1 billion a quarter on new assets, which is just so great. So yeah, they sell, I guess, products. Their product revenue's up 25% after 18, after 42. Incredible streak. And they also have the services business, which is up 38%. Incredible after 28. So yeah, I can totally understand why this company has a super expensive forward PE, a 44 forward PE. I can understand it because they are so growthy. Probably tough to buy meaningfully at this price with new money, but it's a quality one. So thanks again, Jeff Mack. Let's see. He says MANU. So this is Manchester United. I think it's like I got to double check here. It's like a sports team, soccer team, or a club, something like that. Let me go to their website real quick just to get a better idea here. So look at that. I guess they got a sponsor from Adidas. And so yeah, I think it's like it's a soccer football kind of play. So they're headquartered in Northern Ireland. Let's see where the revenue comes from. So yeah, all the revenue comes from the UK. Let's check out the revenue right here. So the revenue is down year over year. So this is not great. The revenue is down 2% after it fell 8%. So that's not great on a revenue decline. Motive says greatest team of all time right here. Hey, nice. So yeah, they're making over 100, 200 mil revenue a quarter. But when we go to their net income, they're really struggling to make any profits any quarter. That's kind of the bad news here. They have not really made any net income at all this year. Yeah, they've made no net income this year. That's strange. So that's the one thing that does scare me. The fact that they just cannot get profitable, really. Yeah, so they're a $2.9 billion company. Oh, wait, we've been looking at British pounds the whole time. Let me kind of convert this to US dollars. But yeah, in US dollars, yeah. So they are losing money every quarter. The revenues are, yeah, same 100 to I just nothing's super blowing me away there. But they do have a unique asset. It's kind of a unique kind of publicly traded stock there. Just joined. Hey, what up, Matthew? Good to see you. WLTH ticker, is that Wealth Simple? I think they just IPO'd. So this is a brokerage. It's kind of like a Robinhood. I've never used them or anything, so I don't know much about them. They're only worth 1.4 bill. And they reported earnings. So they reported earnings and gapped down on the earnings day. Let's see what they reported. So 93 mil of revenue, 21 cents of EPS. So they actually triple beat. They beat on every metric. They did 93 mil of revenue. On that 93 mil, they netted 30 mil. And they really did. So they have a 33% net margin. I actually really like this name. They're already profitable, but we just have a lack of history here. We only have 3/4 of data here. And it looks like the EBIT, yeah, look at that. The EPS was 21 cents this quarter. It's supposed to fall to a negative dollar, 89 cents all the way down to a dollar of negative EPS. So I guess the net income forecast is not good. I don't know if it's some like IPO one-time fee. I don't know. But I really like that industry. I really do. Um, let's see right here. What are good silver to purchase? I don't know. Ticker symbol SLV is just kind of like the main silver ETF right here. Usually, if you just buy the ETF, you're good because sometimes the actual silver mining companies, don't outperform actual silver, but you get like a dividend with some of them sometimes. I don't know. I'm not too good on the precious metals. Hey, what up, Logan22? What's up? Hey, says go buy silver, down 10% on Netflix. Hey, we were doing a good analysis on Netflix earlier. Netflix, don't sell Netflix. Don't sell them. I think they're going to kind of continue to come back. Mate, check Bryna Technologies. I'll type it in for you. I don't know what that is. BYRNA. BYRN stock. Okay, we found it. So this one is on my watch list actually. So there must have been something I liked about this stock. Let's go see what they do right here. I actually don't know what they do. Let me pull this up. So they actually sell. Okay, this is a pew industry. I can't get into this industry. Hey, if the stream gets taken down, just know that's why. Okay, so this is in that industry. One thing I do like that they are net income positive every quarter. Now they're barely making any money, a couple mil a quarter, but they're net income positive every quarter. So yeah, look at that. The total revenue is 28 million. On the 28 million, they netted 2.24, and that they really did net that after they pay 400K of taxes. So they do have like they're running at an 8% net margin selling these defense things. And they have a really good balance sheet as well. Actually, a really good balance sheet. So out of all this, and actually, I remember why I added this one to my watch list. I've looked at like Smith and Wesson, SWBI. This is another, pew play. This I'd way trillion times rather buy BYRN than a Smith and Wesson because this stock right here really struggles with profitability and their margins. So BYRN would be my favorite pick for that industry. MSTR, curious about your analysis. So this is basically your pure Bitcoin play. This company, I would be curious to see. Actually, I could ask AI real quick the answer for this. But basically, this is just a higher proxy Bitcoin. All this company does is they just own a bunch of Bitcoin. And the way they get that Bitcoin is by dilution. So if you go to their cash from financing activities, if this was positive, that means they're either issuing this amount of debt. They either this quarter issued $5 billion of debt or diluted you by issuing $5 billion of shares. And let me give you a hint. They haven't been issuing any debt. So all this right here is stock issuance. So like this quarter, 2024 Q4, they issued $18 billion worth of stock and got $18 billion of cash. And with that $18 billion of cash, they bought $18 billion worth of Bitcoin, and that Bitcoin's now up like 30%. So that's how their assets went from $8 billion to literally $73 billion in just a year because they diluted the life out of you buying so many shit. But that's how the Ponzi works here. That's all they do. And usually they move with Bitcoin, but whenever Bitcoin goes up, usually they go up more than Bitcoin. But whenever Bitcoin goes down, kind of like recently, they go down more than Bitcoin. So it's kind of just a Bitcoin proxy. To be honest with you, rather just in the long run, I trust actual Bitcoin over MicroStrategy. But yeah, just own the underlying asset. Wealth Symbol is a Canadian brokerage. Okay, interesting. I wonder if they could expand international. Yeah, Looney. RIP. Okay, so I've been getting some for PayPal. Let's do PayPal. Now, actually, let me start off by some context here. So PayPal, this is really sad. PayPal is the same price that it was in 2017. So you bought the stock in 2017. It's the same price that it is today. But it's not just a PayPal problem. Look at their biggest competitor, ticker symbol XYZ. This is Block. The charts nearly look identical. So it's not just like one, it's not just a PayPal problem. Like this is Cash App right here. Block owns Cash App. It's 62% of their entire revenue. So Cash App stock is also the same price that it was in 2018. And PayPal biggest competitor is they own Venmo. So PayPal is Venmo, and PayPal and Honey. But yeah, this one is at like this commodity multiple. They're trading at 10 times PE, where they're not at this PE where they're not really expected to create or lose you any value, which is weird. One thing I do like about PayPal though, they are kind of being out innovated just by all these other names, but should be so commoditized, just like sending someone else money. But the revenue is single digit growth, single digit growth rate. But what I like about PayPal is the net income here. They always make over $1 billion to $1.3 billion of after tax net income. So what is PayPal doing with 1.25 to 1.3 billion of after tax net income a quarter, since they don't pay a dividend? Well, actually, they just started paying a dividend, but they spend it all on buybacks right now. Look at the top. They've bought back every quarter $1.5 billion of their stock. Here's what those buybacks do for you. The net income grew 23, but the net income per share grew by 31. It's because the share part of the ratio went down. The share buybacks makes the EPS go higher, makes the PE ratio go down more, gives you more ownership in the company, makes the cost of the dividend go down, and they just started paying the dividend. So yeah, they just paid a 14-cent dividend, which is right around a 1% yield. If you buy PayPal right now, you get a 1% dividend yield. So anyway, it's just kind of like, honestly, it really is decent right here, but don't have it as like a meaningful size position. Don't have it as like a good chunk of your portfolio. Keep it kind of small. Because the risk reward does look really decent to buy a small, super small amount there. I do think. How is Google? Yeah, let me check out Google really quickly. I'd say I'll get to that one. Sadly, I have to go. Dang, I have to go in 15 minutes, and I really don't want to. I'm almost definitely going to do another stream later, just because I'm having fun here. But yeah, Google isn't some crazy overvalued stock. They're actually cheaper than Amazon in terms of a forward PE. Google trades at a 30 forward PE. That's cheaper than Amazon and Apple. So Google, even at all-time highs, even though Google's done way better than those two stocks, it's cheaper in terms of what you're paying for growth. Check this out right here. Well, obviously, Google, we know, is an ETF in one. They own YouTube. They own Android. So in the Google Play Store, so you go spend $100 in the Google Play Store, they keep 33%. That business grew 14%. Google Search. And they also have this Google Cloud business, which is crazy growth, up 32%. After 35, they're a cybersecurity play with their Wiz acquisition, top 10 cybersecurity play, big TPU play. AI play with, Google Gemini, Waymo, quantum chips. I could just go on. Google's a freaking ETF. Let's see. They own 7.5% of SpaceX. And did you know SpaceX is about to IPO at a 1.6 trillion valuation, and Google Alphabet owns 7.5% of it. They're a space play. Let's see if there's any news. Google in talks for fiber asset joint venture with Stone Peak. Alphabet expands NVIDIA partnership with Blackwell deployment. Google expands AI shopping and drone delivery with major retailers. The Google Wallet and PayPal seamless transaction. It looks like they have a little thing with I don't know. Google partners with Apple to integrate Gemini into Siri. That'd be great. Deal valued at $1 billion annually. So Apple pays Google $1 billion a year annually. So check this out. Anyway, if we go to their net income, this is like the real crazy part about Google. This is real after-tax net income. They make 26 to 35 billion of net income a quarter. And what is Google doing with all that money? Well, they're spending a lot on AI right now, which I love, which they can easily afford. They make $30 billion a quarter. cash from investing is under 30 bill a quarter, but the investments have ramped up. I like that they're spending so much on AI. They don't want to get out innovated by like OpenAI and ChatGPT. That's why they're spending so much money right now. But the best part about Google is the share buybacks as well. Second biggest share buyback program of any company on earth. They buy back $15 billion of their stock a quarter. They did slow it down this most recent quarter just because they're spending on AI, but they also pay a dividend. Literally, they pay a dividend. That dividend they pay only costs $2.5 billion. They have so much future room to raise their dividend. Like they could afford to 3-4x their dividend right now. They just do the smart thing and choose not to. Instead, they're going to use that money, spend it on AI chips, invest in the future, do buybacks, do M&A, all that. So yeah, Google's a great one at a 30.9 forward PE. Let's see what Amazon's at. Amazon's at a 31 forward PE, which is another steal of a deal, I think. I just bought more Amazon shares. I bought one down here, and I bought another share of Amazon up here. I don't mind. I just want to build up my quantity of shares in these great assets. Okay, URA. This is a uranium ETF. So yeah, if you don't know which uranium stock to buy, you're like, should I buy Cameco or LEU or UEC? Those are the only three I'd actually buy. CCO Cameco is the best, the most quality uranium play to exist of all time. It's the one I trust the most. But what sucks is, it's at an all-time high, so you can't really buy it at current prices. But I'd go Cameco, and then I'd go with an LEU. Where's LEU? Centrus Energy, yeah. Anyway, this ETF right here, if you don't know which one to buy individually, you could just buy the whole basket, and it's done phenomenal as these rare earth mineral plays. We actually used to buy our uranium from Russia, but we stopped that. We used to literally buy so much Russian and Chinese uranium, but the U.S. stopped that. Now we're sourcing our uranium from Canada and from the U.S., and it's purely to the beneficiary of Cameco right here specifically. They're a Canadian huge uranium play, and I think they do some like other services. But anyway, Cameco is the best uranium play if I had to pick one individually. Mr. Graydon said Palantir. Let me do Palantir. Then we got to get to, there's so many stocks I got to get to. I'm missing out on. I apologize. I want to get to American Express. Yeah, so here's Palantir right here, just a quality growth name. I wish I owned this company because they're a growth beast, but I can't pay their valuation. They literally trade at 104 times sales, not 104 times forward PE, but 104 times total revenue. It's nuts. But check this out right here. Their government revenue, they have so many police stations use their software, the military, the Air Force, their government revenue's up 55%, after grew 33, after grew 12. So like the growth rate is growing on their government revenue, government contracts, and not just the government side, but the commercial side. This is the real growth driver. It grew 73% year over year after 26. Like I can't describe how impressive that is. And that they beat on every metric. They beat on revenue, net income, EPS. And look at this monster balance sheet, no debt at all, completely debt free, owes nobody any money, and they have 6.5 bill of cash, and the cash pile just grows every quarter because they just retain all this net income they're making because they don't owe anyone any money. So anyway, Palantir, phenomenal name, just too expensive. I'd love to own them, I really would, just at a cheaper price, and it may not ever get to the cheap price I'd pay it because they always trade expensive. Let me get to American Express. You know who owns American Express? This is actually pretty crazy. Is the homie Buffett. Warren Buffett, his largest holding is Apple. It's 19% of his portfolio, but a lot of people don't know 18% of his portfolio is in American Express. It's his second largest holding, a huge holding for Buffett, and it's done great. But there was some recent news that like the administration, proposes a 10% cap on credit card interest rates. So that obviously would mean less profitability. That'd be less profits for the corporations. Let's see. So all that aside, this is a great company at a pretty fair price, a 22 forward PE for the quality that they have, U.S. consumer services, international cards. So let's see their revenue breakdown. Okay, so 80% of the revenue is from the U.S., then they do have some international revenue. Cool. Let's actually pull up the bottom line here because this is what's nuts. They easily make 2 to 3 billion of real after-tax net income a quarter. And what is American Express doing with 2.7 billion of after-tax net income a quarter? Well, they do a crazy dividends. The dividend only cost 586 million, so easily lots of room to raise their dividend. But what are they mainly spending money on? Share buybacks. This is the best part about American Express. At the top here, they're spending $1 to $2 billion a quarter solely buying back their own stock. So that, that helps out the net income. So the net income's up 15, but the net income per share is up by 18. So they bought back 3% of the entire company and paid a 0.6% dividend. So that's crazy. They're quality and they're not even like super expensive, 22 forward PE. Might buy some Rockwell. Oh yeah, do you know ticker symbol ROK? Maybe a little less known name. Let me check out Rockwell real quick. Then we'll get back to buy Taiwan Semi, Broadcom, and Nvidia before the next leg of. Yeah, hey, the SMH ETF. It's another one. Um, Let me get to RO, and then we'll get to FOUR. I got to go quick here because I got to go in exactly 10 minutes. If you want to hit the follow button, we stream every Sunday. That's exact same time. But I sell nothing. I have no course book. If you want to support me, the only way to support me is just subscribe to my YouTube channel. It's called Nathan Roberts, and then link to my bio. You can just type into YouTube Nathan Robert, and you can replay the stream. I'm actually, the very beginning of the stream is really good because we look at these software names in depth. So here's Rockwell Automation. This might be like a robotics player. Automation. Their current PE is at 55, but the forward PE is at 37. So EPS is expected to grow a good chunk. So intelligent devices. So it looks like that annual revenue is down a little bit, but it did bump up this quarter, up 14% year over year. But they did have a bit of a hiccup for, it's still lower than it was in 2023. Let's see about their software and control revenue. So same with software and control revenue, still lower than it was in 2023, and life cycle services. So we kind of blend all that together. This was a great quarter, though. Specifically, that probably explains why this stock gapped up on earnings day and is at an all-time high, literally all-time high right now. Analysts expected 2.2 bill of revenue. They did 2.32. So this was a great beat on revenue. Whoa, okay, so they must have had some one-time adjustment to their EPS. Did they do an acquisition or something? So yeah, since the net income was only $30 million, here's how we can tell if it's a one-time adjustment. You go to the operating profit, and yeah, look at this. Okay, that makes total more sense. So the revenue grew 13 and the basically net income, the profits grew by 60%. So they really did have some margin expansion here in terms when you exclude this little, so they made 30 million, but they really made around 400 million of after-tax net income. It was a record quarter. So interesting here. Rockwell Automation. Maybe it's some sort of like robotics play. Let me actually pull up their website just for the heck of it. Rockwell Automation, global leaders in digital transformation and industrial automation. Okay, so optimized production. Oh, okay. Anyway, hopefully that was helpful there. Rockwell Automation. The forward PE versus the current PE is good. Thoughts on SE? Yeah, let me get to SE really quickly. I saw someone. This is like basically an international Amazon. So it's like an international e-commerce company. So let me see where the revenue comes from. So yeah, look at this. Southeast Asia is 70% of the revenue, and then Latin America is 20%. When maybe these companies could offer higher growth potentials than like the US or an Amazon, who knows? But yeah, their e-commerce revenue is 71% of their entire revenue. And I actually really like this company because they're profitable. Check this out. If we go to their bottom line, and these year-over-year growth rates are phenomenal. It's triple-digit growth for the past 5 quarters in a row. So it's a great improvement from the previous year. Triple-digit growth. They're making 400 million of after-tax net income a quarter, and they're going to be making that if we just kind of look at their EPS this quarter was 59. It's supposed to go to 83 in 2 quarters. So what's the forward PE on this company? Yeah, a 35. That's actually probably fair for this company. I mean, that's pretty good. Active users, they got quarterly active users of 670 million. Interesting there. So yeah, I do like this one actually. It's like an international e-commerce play. Maybe a little expensive at a 35 PE. I wouldn't full port that one yet. So, HL stock. What's this one? Helka Mining. This must be a gold or a silver play. Check that out. New super all-time high for this company. Let's go see what commodity they're in. I'm guessing it's gold or silver. So yeah, silver concept stock. They own a bunch of mines, it looks like. Let's see right here. So yeah, Greens Creek Mine, Casa Verde, whatever, Lucky Friday. Let's see where's the revenue come from. So yeah, 50% of the revenue is from Canada, 20% China, 19% Korea, but none of that matters because it just follows 9 million, up 67%, and they netted on that 100 million. And they have this is a fortress balance sheet. So yeah, this is kind of like a silver play. Yeah, if we just kind of look at the stock recently, see how it's done so good. If we just pull up the commodity of silver, ticker symbol SLV, it's also seen that incredible uptrend just since, a year ago. It's like nearly tripled since a year ago. So nice. Um, What up, Venom? Nvidia Taiwan, two of my largest positions, more returns than an ETF, but it's risky. Yeah. Hey, if you don't know which, maybe, I saw someone say this a second ago. If you don't know which semiconductor name to buy, you could just buy the whole, I certainly wouldn't buy it at current prices. I put this on your watch list for the next time the semiconductor stocks go on a massive dip. Then you buy this one. But this one's really benefited from the memory shortage. Nvidia stock has not performed this well. This one's actually outperformed Nvidia, the whole semiconductor ETF, because the other parts that have been picking up their slack, like Micron, for example, the memory shortage, the SanDisk have been crushing it. So yeah, SMH just breaks your money before you into all the semiconductor names. What platform do you use to look up financials? I like how clean and to the point it is. Yeah, hey, this is a brokerage right here where you buy stocks on my favorite app. It's called Moomoo. It's in the link tree in my bio, very first link there if you want to use my affiliate link. But yeah, you can just type in a Google Moomoo, or if you go to the link or if you're on YouTube, link in the description, a very first link there. Um, Let me get to this one here. Skywater is a small chip company. I just started a position in, promising, is profitable and growing. So SKYT, Skywater Technologies. Yeah, they're at a, let's see, new 52-week high, multi-year high right now. Yeah, they're only worth 1.6 billion. So yeah, they're definitely new. They're definitely small, only worth 1.6 billion. But let's check out their website really quickly. Yeah, provision and development of semiconductor services. So let's see their kind of website right here. I guess this is what they're selling right here. Their markets are in aerospace defense, automotive. Well, let's go check out their fundamentals because that's what matters. So, okay, so wafer services. So they're in these wafer services, time and materials cost, fixed price contracts. So let's see right here. The revenue is 150 mil this quarter, a great increase from the previous year. Revenue's up 60% year over year, so 150 million. And on that, they netted 7.85 million, which actually is a record. You're right. They lost money the past two quarters, but that doesn't really matter. They should be, let's see the EPS. So they are supposed to stay EPS negative. But yeah, EBIT, yeah, this was a massive beat. They expected negative 2 million. They did 13 mil. And they're expected to do 6 mil and then 2 million. And if they're beating this massively this quarter, they're probably going to beat massively the next couple quarters. Yeah, look at these revenue expectations. Revenue is going to go from 61 to 147. So the revenue is still going to more than double. Did they acquire a business? Okay, so that might be it. So this quarter they spent $88 million buying a company. That explains why their assets out of nowhere quarter over quarter jumped up so much because they acquired a business. But okay, so if we go to their wafer services, yeah, that explains it. It went out of nowhere from, no revenue, 5 million to 92 million. It must have been from that M&A. But anyway, really nice there. I like they're losing no money. Um, okay, GGG. Wait, let me. Oh, well, I forgot to get to this one. I'm so sorry. Let me get to four. Oh, and I have to go in literally 2 minutes. I'm so sorry. Please load here. Shift four payments. If you want to follow one with stream every day, I really don't want to end the stream, but I have to. I'm probably gonna do another stream later tonight, maybe a 2 or 3 hour stream if you want to hit the follow button. But yeah, we stream every Sunday this exact same time. Normally we do it for a little longer. But yeah, they're at a 17 forward PE for right here. That's a cheap valuation below S&P 500 multiple. Let's go see the EPS projection. So do notice that for the past 3 quarters, they've been missing on expectations. Like they expected 70, they only did 17. So yeah, they actually have been missing on expectations for the past 3 quarters in a row, but the revenue grew 29, and on that, they really did, this has to be like a one-time adjustment. They only did 33 mil of net income, but the operating profit was 111 million. So they're having some weird adjustments to their net income right now. That's like more than just their taxes. Ooh, it probably is explained by this acquisition right here. They just spent $2.7 billion buying some company. That'll probably help out their future revenue. Yeah, the revenue is going to go from 850 to 1.14 because of this acquisition. So that must have artificially hurt their net income. So they would have made more, but they had some M&A fee or something like that. Anyway, shift forward payments. So that's why you always look at the forward net income. The 17.6 forward PE seems pretty fair. Maybe the stock has just done bad because they've been missing on expectations even before this quarter slightly. So, okay. Greed said MLI. Maybe I can get to that one. Moeller Industries. Wow. This is like an electrical infrastructure play, like a specialty electrical contractor, I believe. Yeah, piping systems right here. They do like this infrastructure work, industrial metals, that's up 5%. Let's see, are they just they're probably just benefiting from the whole AI boom. Revenue's up 8%. Whoa, look at those. So they have a 20% plus net margin. Yeah, 20% net margin this quarter. So the revenue was 1.08 billion, and on this billion of revenue, they netted 210 mil. So the revenue grew by 8% and the net income grew by 22. So that's net margin expansion. Net margins expanded 2.5%. Plus this fortress balance sheet, takes a lot of risk off the table. They have no debt at all and a really nice balance sheet as well. So Moeller Industries, pretty nice there. What is this one? GGG Graco stock. So they're at basically an all-time high right now. Are we dipping tomorrow? The market is not open tomorrow, which is unfortunate. But tomorrow, on Monday, we will be live streaming. If you guys want to hit the follow button, I sell nothing. I have no course book. I don't coach, nothing like that. So here's Graco stock, a 28 forward PE. They're a contractor. So contracting revenues up 8.5%. Industrial revenues up 1% year over year. It kind of reminds me of Moeller Industries we just looked at. They must have beat on expectations or no, they missed. So they missed on revenue, but they beat on net income. That net income had to have been a one-time adjustment. I don't know. Good balance sheet, though. Really good balance sheet. What was the valuation? Yeah, a 28 forward PE. It's kind of not as growthy as I'd like for this to be at a 28 forward PE. It's actually probably a steal of a deal. This has more growth in like a cheaper PE. Check out ticker symbol Dave right here. Dave's stock has been flat for a year. And let me show you the forward PE on this one. Forward PE is a 15. I mean, even right now, the current PE is a 19. They're trading 19 PE. The forward PE is a 15.1. Check out the growth here. The revenue's up 62 after 40. And on this 150 mil of revenue, check out the profits. Insane. They're already profitable. They're super profitable. That's why the forward PE is a 16. Same with FCF, which is free cash flow. Free cash flow hits a record every quarter, triple-digit growth. Operating profits, quadruple-digit growth. Fortress balance sheet, that's deleveraging. Same with the operating cash flow hits a new record. So anyway, hope you guys have a great rest of your day. I got to go. I'm so sorry. Hit the follow button if you'd like. We'll go be live in a couple hours from now. And thank you so much to everyone on the YouTube stream. I hope you guys have a great rest of your day. I'm so sorry I couldn't stream longer. We only got an hour, like 20 minutes in, but I have to go. Simmons, Marcus. I'm so sorry I couldn't get to Simmons. I love Simmons as an electrical infrastructure play, and MELI is a good one too. That's Mercado Libra. I really like that one. So